All right, let's get another voice in then. Ravi, the CFO of M&M Financials, joins us on the phone line from Mumbai, not just to talk about these new norms, but also about the issues that they are facing in terms of their own numbers. Mr. Ravi, good morning. Your stock has taken a substantial hit because of this quarter's numbers. Just can you throw some light on whether you expect to see any recovery anytime soon? I mean, you have been booking losses on your MHCV loans as well. How tough is the situation currently, and when do you expect to see recovery?
Yeah, good morning, Latha. Basically, coming to Mahindra Finance Q3 numbers, if you look at it, of course, yes, it has been, there is a deterioration in terms of those numbers, in terms of especially NPA provision. But actually, we are hopeful. Why we are hopeful of Q4 is that in case of us, I mean, basically Mahindra Finance, we operate throughout India, and the NPAs are there are NPAs in some of our northern branches. There are NPAs in some of our southern branches. And in case of northern branches, we have able to show a good recovery in terms of Q3. But what has happened in terms of southern states, especially Kerala, Tamil Nadu and Andhra, that the harvest season is not in December or Q3. Actually, it falls in Q4, that is January. So we are hopeful that the harvest has been good, and we are hopeful that in the Telangana situation is also a bit improving. And Karnataka, again, there is some sort of a stability in terms of government, and the mining is just about started. So we are hopeful that Q4 will be certainly better than Q3, and then we will see a good recovery.
Ravi, I wanted your view more on RBI's forbearance given for loan restructured for NBFC companies.
Yeah.
Is that going to make a difference? Will we see lower NPLs for you? Will we see higher provisioning? What is the impact on your P&L, say, in the fourth quarter?
Yeah, see, we predominantly operate in retail assets. So as far as this particular restructuring is concerned, that we will not be sort of neither benefited nor affected, except a very, very few assets that we have in corporate portfolio. Our whole corporate portfolio size is something like about less than 1%, and of which the NPA is also very little. So I don't see any, I mean, this sort of, we will be neutral as far as this particular circular is concerned. Maybe a very small benefit we will get. So, but I don't think that is going to play a significant part in our number in Q4.
What is your loan growth likely to be Q4 as well as FY15? Just ballpark.
Ballpark, that we in fact, the Q3 just about 9% was our growth in terms of disbursement. And Q4 we expect some sort of a similar type of growth. Only see, now the focus is more on the correction of the asset quality, and without losing the market share. As far as the disbursement is concerned, we have not, in fact slightly we have improved our market share, even though the disbursement figure is 9%, which is usually no lower than what we normally do, 15 to 20%, but we have retained our market share. And we continue to expect to retain our market share even in Q4. But the numbers, the basic numbers itself in the automobile industry is going to be lesser. Even if I retain the market share, the disbursement growth is going to be a bit muted. But at this point of time, our focus is going to be with a good harvest. And our farmers, customers, and good,
Ravi, I'm looking for a number, if you can, actually. How much better can it go from 9?
Yeah, exact number we don't give forward guidance, but it should be in line with something like Q3.
All right, then what about on margins? I mean, this quarter your NIMs contracted to about 8.7%. Do you expect to see further contraction in the quarters to come?
Like everyone else, we are also expecting that the inflation tapering down, and we expect that at least the interest rate would not go up. That's our view. Our view is, so we do not see any, and we have tied up, normally we operate with long-term funds. We don't take short-term, we don't have asset liability mismatch. In fact, our asset liability mismatch is excellent. So I do not expect, unless completely reverse situation, that when interest rates start going up for whatever reason, but I don't expect that our margin should come down. Maybe it can marginally go up.
All right, we'll leave it at that. Thank you very much, Ravi, for joining us with those details. So retail NBFCs clearly are not going to be impacted much by the Reserve Bank rules. It will only be possibly companies like IDFC. But even there, it looks very watered down from the